Everyone, how are we going tonight?
Hey, Kate, can you hear me okay?
Yeah, I can.
Excellent.
Perfect.
I can see you fine.
Awesome. Oh yeah, Wi-Fi dropped out.
It just dropped out. I'm actually using my wife's laptop and I'm in a different room.
That's strange. Are you in lockdown at the moment?
Oh yeah, we're in lockdown. Yeah. Welcome to Queensland. I think we've got 2 cases and we're in lockdown. Go figure.
Yeah. Oh geez. I mean, at least that.
Unless you want to talk about, lockdowns and how crazy they are.
That's all right. We've lived through them.
Yeah. Victoria's got a few more in Queensland.
Here, so. Yeah. Just a couple. I think we win in that regard.
I think so. How many have you had? 4?
Awesome. Yeah, I think so.
And I think you've been for 160 days or something.
Yeah, it was good fun. I mean, my partner was working from home for like 9 months straight.
Hey, well, I'm not worried. I've been working from home since about 2015. So when they said you got to work at home, it was like, so what? Easy.
Yeah, you're lucky. Okay, it's from WA. Nice.
Okay.
Bit of a dream state at the moment. Perfect. Awesome. So we'll kick this off for tonight. So tonight's webinar, we have Andy here joining us. So Andy is a securities and derivatives dealer, and yeah, he has an FSL license. So he's going to go over some of his general knowledge about the crypto market and exactly why it's been volatile, and just a general sort of educational thing about its various cycles, and I guess the FUD that's been going around at the moment with this big price drop that's happened, or price correction. So just a little bit about ePocket for those who haven't heard about us. So we're just a Melbourne-based cryptocurrency exchange. We were founded back in 2015, and we've just introduced our new platform and application this year. So we kind of used the COVID lockdown, with the slower onboarding to develop our application and keep it competitive in the market. Our exchange has API connectivity to 5 different global exchanges. So rather than having to depend on our own buyers and sellers, we have the combined buyers and sellers of the combined liquidity within the one marketplace, which is really exciting. I've got a little bit about Andy as well, just a little intro slide. So yeah, like I said, he's a licensed securities and derivatives dealer. So Andy, you're the founder and managing director of your company, Andica?
Correct. Yep.
Yeah. Perfect. Yeah. So Andy was actually one of the original ICO, so initial coin offering investors for ePocket, and yeah, he's sort of seen the journey a little bit, but I just thought we've got quite a good relationship, so thought we'd get him in and talk about exactly what these price cycles are doing, because obviously
we'll do our best.
Andy, you've got a lot more experience than what I do.
Yeah.
Perfect. So Andy, do you want to take it over?
Sure. Well, we can obviously just focus a lot on the crypto space, but just for everyone, I'll just do the general disclaimer. Obviously, I'm going to present this in the form of general financial advice. It's obviously not personal advice. Keep in mind the crypto space, as far as Australia is concerned, it's still not deemed a financial product. So unlike, say, shares or exchange traded options and other things like that. So we're just having a general discussion about things. But just to start off, I always love these sort of little meme slides there. There's Buzz Lightyear and there's Woody packing it. And some people don't realize this, but, Bitcoin's corrected by 30% or more about 11 times since 2016. So you think where we are today in 2021, that's in 5 years. So these corrections are pretty normal for the crypto space. And if you can't handle these sort of corrections, if that makes you panic, then maybe don't be in crypto. But it's just par for the course for this particular asset class, let's call it that. And its total combined annual return, however, has been astonishing. It's nearly 200%. And there's another slide, I think, after this one, Kate, which just sort of illustrates how Bitcoin's performed against gold and listed stocks and those things. So I think on your side, Kate, you just need to advance the slide, or can I do it?
Sorry.
There we go. That's the one. There we go. I'll try and...
Yeah, I was going to say, I think you might be able to.
There we go. Yeah, so that's just to give everybody who's sort of new to the space an idea that, the compounded annual growth rate of Bitcoin, and that's just Bitcoin. We're not talking Ethereum or, Cardano or any of these other tokens that are out there, and it's just astounding. And just look at that when you compare it, into gold, into the S&P 500, to the NASDAQ, to long-dated US Treasury bills, and then there's, two particular darling stocks, obviously American ones, but Tesla and Amazon. So it is very real. But at the moment, it is going through a bit of a patch. Even just right now, I see it's at 33,400 odd US a coin. I think that's down about $1,100 already. So things just happen. But a lot of it at the moment, as we'll talk, is in what we call the FUD, the fear, the uncertainty and doubt. I'd add another D there as well, disinformation. There's plenty of that sort of stuff going around, and a lot of people who are trading in the space, we call them the weak hands, they panic, they're probably leveraged, and that, sees these sort of price movements and that sort of thing. So we'll just talk about why things are doing that at the moment, and then come back to the narrative of why we think this is a pretty exciting space, and we'll put a few things together. So hopefully we'll have a bit of fun.
Yeah. Okay,
and jump in, Kate, if you want to say anything here. But we've got the Bitcoin market volatility, and there's the digital nature. That's like where it is at the moment, how it's evolving. Obviously, the media is always there. I mean, it doesn't have to be talking about Bitcoin. It's a variety of different topics out there at the moment. You just got to talk about lockdowns and how the premiers seem to love them, and yet there's plenty of contrary opinion saying, hey, they're not the best thing to do, and wearing masks and wearing this. So media is taking a side, of course. There's the comparisons to the fiat money. That's your normal, Aussie $1 coin. I was going to say $1 note. We don't have that anymore. The Americans still do. And then, of course, it is a market at the end of the day. People do trade these things, so they still come under the market forces of supply and demand as well. So there's a lot in there. But I think at the moment it's very much driven in the information space in particular, because we've actually got bull markets in equities at the moment. The US markets are basically at record highs. S&P 500, the Dow, the NASDAQ, they're all at record highs. Our ASX 200s, virtually come back up as well. We're in good shape as far as the market's concerned. I mean, I'll talk about the characteristics of that a little bit later on. But in the crypto space, it's like it's in a bear market. It's had all sorts of things thrown at it at the moment. But there's a lot of things behind the scenes, and we're just got a bit of commentary here. I can't say I'm the orator of it. I wish I was. If I was, I'd probably be coming, to you on my 125-foot super yacht parked out the front of Kira Beach instead of my little apartment room here. But it is a fascinating time to be in the crypto market space. So I think we'll go to the next slide, Kate, if you can. And we'll just sort of talk through these, and hopefully everyone can see them okay.
Perfect.
All right, now this one's an interesting one, and I'll try and explain what the global liquidity proxy means. It's basically the free amount of money or printed money the US Fed's done, the RBA, the ECB, the Bank of Japan, all the big central banks. And if you look at the bottom of that part of the chart, you'll see it's like a little V. That's basically March. It was when the bottom of when COVID was at its worst. It's when markets really corrected really badly. And the Fed, RBA, they just turned on the taps. They just printed money. And you can see that in that light sort of green line there. And we've just called it the global liquidity proxy. And then, well and behold, look at the S&P 500 as an index. What has it done? It has just followed the money. Follow the money. And that's because that money is finding its way straight in to the markets. It's not finding its way really to the main street. It's not really helping all that many people, but it's definitely helping, Wall Street or the Martin Place Wizards, in Australia, if I can put it to you that way. And that's important just to get the frame for why people are excited about crypto in general, not just Bitcoin, but a bunch of others, because the global liquidity that's being pumped out is obviously of a very big concern. And that's really the fiat money. That's the printed money that all the governments around the world that we use for our medium of exchange. You want to go buy lunch, you've got to pay Aussie dollars, etc. But that's a pretty powerful chart. And it just goes to show, when they opened up, the cash registers, or the printing press, I should say, it's just allowed markets to move up and up and up. Now, that means they've moved up not on their fundamentals, but they've moved up because of cheap money and very, very low interest rates, or in some cases around the world, negative interest rates as well. So just keep that firmly in the back of your mind. That's what's happening right now to traditional markets. And then that's sort of one of the backdrops to why there's such an ever-growing interest into the crypto space. So I'll get you go to the next slide there, Kate. Okay, so it's a similar chart, except this time it's, again, the central bank liquidity. And this time we're looking at the market caps of, Apple, Amazon, Facebook, Google, Microsoft, Netflix, Tesla, the big tech companies. Incidentally, these are the ones, particularly in terms of, say, Microsoft, Google, and Amazon and Apple, survived really the dot-com boom and bust. They were infant, babies back then. Remember Amazon, Bezos started off in his garage with it, and him and his wife, and they just did, I think it was email or web book orders, come in here and we'll email you out, or not email, obviously you can't email the book, get your email order in and we mail out the book to you. And that's all it was. And then it's just boomed from there. And that's just sort of a side thing where we are now with where we are in the crypto space. In way I look at it is where at this time now is like 1998, 99, 2000, 2001. We're in that space where it's all happening. And, some people have called this, web, 3.0. And we're just going to like the next evolutionary move. And if you stop and really think about it, it makes sense because data's everywhere. We're connected people on everything. We've all got a smartphone of whatever it is, and, we can do what we want on it. Right now, because of COVID, for example, we see QR codes. We go in there, sign in. They're just becoming part and parcel to our lives, and they'll become more and more because eventually I can see the day where that's where your money's going to be and everything will be on there. It'll take a bit of time, and there's a lot of resistance to that too. From big bodies. Jump in any time too, Kate. I could talk all night otherwise.
You're right. I say that, especially with blockchain technology.
Oh, absolutely. And the thing is, it's growing at a pace that what we probably predict, if we do predict tonight, could be out. I remember reading things that people were saying back in 2017. They said, if we're lucky, we could get to this stage and hopefully be there by 2024, 25. And then you read someone again going, we eclipsed that, back in 2020. We're so far ahead of it now. Just look at the DeFi markets and everything else that's happening. It just grows and grows at that exponential rate. But just to get back to that chart, again, it just to re-illustrate that the cheap money has pushed up markets. And it's really, really pushed them, in this case, tech stocks that we all know about. And again, I see that and think there's a risk in the market as a general nature as well. And this comes to, it'll all come together. We've got a few slides to thread in. So I think we can all agree that given the liquidity that's been coming out, you can go to the next chart there, Kate. That's okay. Won't give anything else because we can come in to see how the Fed works, because this is now tying into the Fed. Now, we're going to use the Fed as the main example because they are the big, central bank of the world. What they do, everyone else follows, just how it goes. And hopefully everyone can sort of see that here, but we can see a market and we can see various points where the Fed says something, take the first one. The Fed says the economic outlook remains strong, stocks drop. And then, of course, they drop too much. So the Fed, comes out, raises interest rates and says it will reduce its assets on autopilot. The market tanks again. Then they realise, we've done something wrong. They back away, says it will adjust policy quickly and with more flexibility. Then the market goes up. Time goes by. The Fed says economic growth is weighing on the US economy outlook. The S&P, rallies even better because they've talked it up. Then, of course, COVID hit. Falls really bad. The Fed says the economy is well below pre-COVID levels, and then the Fed slashes interest rates, to zero, says it will buy an unlimited amount of, assets, and then that's it. It's just pushed markets everywhere. And then part of the narrative, yes, the blockchain's there. We know it's there for doing, decentralized finance applications, smart contracts, the security of data and information. And those sort of things, but it's also something that is outside of the zoo, if I like to put it to you that way. And if we go to a couple more slides, we'll start to see where the cryptos are starting to come in and why it's important and recent stuff. This is just another chart just to really put in perspective. There's the fundamentals of the market. It's an interesting chart. So that's the correction, of when we had the COVID lows, and that was pretty much everywhere, ASX, US, UK, and then you can see how the Fed actions have really driven it. The rest of it's just fundamentals and stuff, which people go, whatever. And the biggest worry, of course, is at some point the bill comes due, the check comes in, and then what happens? And I think that's when we're going to start to realise, yes, the current system we're in is a bit shaky, and, we're going to need to make sure we've got ourselves a bit covered on other assets. And that still means things like, even gold and silver and other commodities too. But the crypto space is very important because in some cases, in Bitcoin's case, of a limited supply. So we get the drift.
Yeah,
we see what we're in, the markets we're in. Sorry, you go, Kate.
I was going to say it definitely is utilised as that hedge against inflation. And like that was seen...
Well, we haven't had the inflation yet. That's
March,
coming.
I think when the US, okay.
That's coming. It hasn't happened yet because they make a lot of stuff up. But just keep that thought there for a moment. And this chart might be a bit hard to see. It'll probably be better represented in the table that we see next. But just leave it there. But that's just predictions on where the US debt's sort of moving and all that sort of thing. So at the moment, they're basically their federal debt is about 103% of the GDP of the United States. So what the country produces now is actually debt. And you can see the trajectory of where it's heading. And for those, I know it's a bit hard on the screen, but basically, where we are, I don't know if my thing, the cursor's there, but you can see where the lines divide off on the dotted line. But look at the curvature. And they're just a couple of scenarios of where the debt's going. And that's going out to about 2050. So what's that going to do to the valuation of the US dollar and hence then the Aussie dollar? What's its buying power going to do? Well, I can tell you what's going to do. It's going to destroy it. It's going to make it even worse. Now, if you flip over to the next slide, please, Kate, there's some numbers in here. Now, I apologise if you can't see it, but I'm sure we can get you bigger screens. We can put a link on the YouTube one, but I'll just read here what's important, and this is the real thing. Now, this comes from the Committee for Responsible Federal Budget, so it's an arm of the US government, and it's their budget projections under a certain view of where they are now. So if we go to the third column, it's hard to see, 2021, the spending. Now, this is spending, it's 26.3%. That's their budget, but their revenue is only 16, so the deficit is 10.3. So that means for the 21 year where they're in now, they're out 10%. And we're talking of a multi-trillion-dollar economy over there. So that's a lot of dollars. But if we can go to the next column, it says 2031, it goes to 23.2%, but its revenue then only picks up a little bit, and the deficit's only 5.7. But the bottom line, on the bottom row there is the debt to GDP, and that's now at 107%. But this is where it gets out of control. You get to 2041, it jumps to 145%. Jump to 2050, it's 202%. We're starting to talk about Venezuela's scenarios here. And the thing is, where that arrow is, it's 32% of spending that includes social security, healthcare, other mandatory spending, discretionary, but the big one is net interest. They're going to be spending nearly 9% of their budget on their interest. I mean, they're in such a dump, it's not funny. But no one seems to care because that's out to 2050. And you've only got to look even right now. President Biden wants to do about a $1.8 trillion infrastructure bill. This is on top of a $6 trillion budget. they just keep adding it on and adding it on and adding it on. I mean, we can go out to this time next year, and I think the debt just on the US side of things in terms of their cumulative deficits is nearly up to 34 trillion US dollars. And there's no sign of that being replaced or being, covered. Now, this is important because this is one of the key reasons why people are so interested in the crypto space. It's because we can get into something that's outside of the zoo. And even now, you've just seen, you could probably remind me here, Kate, the guy in South America, I forget which country it was, El Salvador, came out and said, we're going to adopt Bitcoin, aren't we, as legal tender. And he's doing it. And he I can't remember the app they're going to use, but he's going to say every El Salvadorian citizen, get your phone, download this app, and you get $30 worth of Bitcoin on your phone. And why is he doing that? Because he's worked out that 70% of his citizens don't have a bank account, but over 90% of his citizens have a phone. If they have a phone, then they can conduct transactions via an app, say like ePocket, and do things. And that's just one little country. Yeah. And then more and more of them are going to start to jump on this, and slowly but surely it just filters out, and that's what's going to happen. But the reason they're doing that is they're seeing this. The US dollar is under threat. It's under decline. I think the next slide, gives us a chart of just the buying power. Yeah, there it is. Now, this is just astonishing. So this basically started back into 1913, and that's the top part. And then you can see how it fell, went back up, and then the US President Roosevelt basically took possession of gold, put out a decree to say to Americans, you no longer can own gold because they needed it. They got rid of the gold standard. They got rid of that in the 70s. But look at the graph, though. The main thing from the graph is where its trend is and where it's flattening out to. And down the bottom, it tells you at various dates what you could buy. Today, that $1 today, you'd be lucky to buy you a $1 coffee at McDonald's. Back in 1933, that $1 got you 10 bottles of beer, as in its buying power. So it's devalued. You see what we're getting at? That buying power is less and less and less. And you know that because over the space of time, and people would know the old Big Mac index where you compare Big Macs from one country to another and all that sort of stuff. But they've generally been going up in price, haven't they? 5 or so years ago, you could probably buy the Big Mac for $3.50. Today it's $5.50. And the reason of that is the inflation. And that is also indicative inverse into this chart, because that's what it's showing. If your dollar is getting devalued like that, just holding it means you're going backwards. That's why Michael Saylor, who's a big proponent of Bitcoin with MicroStrategy, says he owns a truckload of Bitcoin, because he says, why should I own a truckload of US dollars on my balance sheet? Because after a year, let's say it's 100 million, after a year, it might only be worth 95 million or whatever else. At least if I've got something like the Bitcoin on there, I've got a perfect non-linear and non-attached hedge against it. So that's a bit macro for everyone. I know we haven't talked about bear and bull markets yet, but this is the big macro thing that people need to be mindful about, because I believe we're, with Bitcoin and the good cryptos, we're still in a bull market with them. But within big bull markets, you have these little bear markets. You have these periods of great volatility. And if we start talking about it now, that's where that term comes out, FUD, fear, uncertainty, doubt. And there's been so much of it. I mean, look at the nonsense about Elon, who was I love Bitcoin, and then he came out and said, I'm a bit concerned about environmental flows about it. Apparently uses all this power and all this stuff, and he put the kibosh on it, and Bitcoin fell. Now, that's true because some of the miners that are behind Bitcoin, they're in China, and they're probably getting their power from, coal-fired power. But the reality is, most of it now is coming from green energy sources anyway, because if you are a miner, the smartest thing you could do is find a place where you can get the cheapest power. Because if you get cheap power, you're going to make more money. It's that easy. And then, of course, the Chinese government's cracked down big time now. They've virtually said to all their miners, shut shop, go. And that in turn hurt the price because the hash rate's fallen, people panic. Again, the weak hands are the ones that are panicking. The strong hands, the whales, they're just looking at these periods now and then just gobbling up more and more and more. And I know there's several other websites you can look at and they can look at, your key address, and they can go, oh, this person's on average, not me, but they can work out and say, well, on average, these new weaker hands have only been in the market a couple of weeks, so they're nervous. Whereas other people have been there for many months, and these others have been here for many, many years, and they're not moving, they're not panicking. But why is China doing that? Because, hey, they want to bring out their own yuan. They want to actually have their own digital dollar. And they might be able to do that in their country because they're the Chinese, and say, hey, if you don't have it, guess what? You won't eat. And other things can happen to you. And obviously they don't want the competition. So then all these items and these things start to come through, and that affects the market. And then we start hearing stories that, the US government might be looking at FedCoin quicker than we think, and therefore will they be against it? Or what about rules? And those sort of things. There's so many dynamics, and it's just affecting the price. And yet you look at with the Ethereum side of things, I believe the smart contracts are at record highs according to Glassnode when I last looked on their website in terms of that process. So that means the architecture on it's just better and better. Bitcoin is getting more and more use with the Lightning overlay, the Lightning Network overlay. For those people who don't know, that's the strength of Bitcoin is its security. They only process, a block every 10 minutes. Each block size is about a megabyte, but the average transaction is like 500K or something small, and therefore it's safe. It doesn't have speed because you can't have all three. But there's an overlay that they can use now on the Lightning Network, which then gives it the speed because it gets the foundations in the security. And, it's kicking goals too. Then we've had, of course, politicians going about the recent hacks. I love this, these guys who hack stuff. And then it's reported they get paid millions of dollars in Bitcoin, and people go, see how bad it is. It's Bitcoin. It's bad for criminals are everywhere. The FBI found them inside a day because they found out their address. They found out what servers they were on. They just got, who they need to ring up and tied them up, found them and caught them. They were dumb crooks. Had they said, listen, give us a suitcase full of unmarked, use $10 US dollar bills and do this, this and that, they would have probably gotten away with it. I mean, the reality is more crime happens every day of the week with real fiat money than whatever Bitcoin's going to get involved with. But, it's bad in that sense. So that's a real classic. And then if you see it at the news and people believe it, that's the thing that drives, me insane about it. But you can only communicate to people and say, look, look at what you're really looking at here. We're looking at a change in how networks are presenting data and carrying the information. And then the big thing is, I'd be a bit worried if I was, working at a big bank these days, because in 10 years' time, they might not have a job. Because if something like FedCoin ever comes out and then the Fed can start issuing digital dollars, why do they need banks? All they need is to press the button and then you go mobile phone, ding, ding, my FedCoin just turned up. Oh, cool. I mean, we can do that now to now. That's peer-to-peer, basically, because we can do peer-to-peer right now. I can say to Kate, hey, can you get me that nice bottle of scotch at that place down in, Little Collins Street? And no worries, Andy. I'll go, cool, I'll just send you whatever the cost is right now. You like Ethereum? Okay, done. Bang. Easy.
Yeah.
Anyway, I've taken a bit there. You want something to add to that chart or anything else there, Kate?
Oh, sorry. No, at the moment. I think, it really just all this chart reminds me of is my dad. My dad's about 70 now, and just him saying, oh, I used to go grocery shopping with like $1, with like 50 cents or something like that, and he used to buy like potatoes for dinner and all this other stuff. And today 50 cents buys you like one single potato like that.
Exactly.
So I was laughing when I saw that chart because it just reminded me of the wild stories he would have about how cheap everything was. A beer was $1. And then here we go spending like $13 on a beer in Melbourne.
Yeah. Well, that's it. That's happening right in front of your eyes. But because you need Aussie dollars to conduct your life, to do your consumption, obviously that's how it is. But over the time measured in decades, that's what we're seeing. We're seeing that destruction. We're seeing that loss of value. And all fiat money goes this way. This happened to the Romans. If you're a person of history, the denarii was their dollar, and at first it was actually made out of real silver, and then they, and had copper, and then they thought, that costs money to mine that stuff, and we haven't got enough slaves and everything else, and hey, running wars around the globe as the Roman Empire cost money and we got to pay for mercenaries. Oh, let's put, I don't know, some other garbage in here and we'll give it to them. But people worked it out. Even back then they worked it out and said, hang on a sec, that denarii used to have X silver, now it's got Y silver. You're giving me less. So if you want me to be your mercenary, you'll give me twice as much. And then effectively their whole economies were all on promises. The empire obviously got too big for its stuff and then it collapsed. Because people said, hey, I don't want this anymore. I mean, that's me being, paragraphing it and all that sort of thing. But that's essentially what's happened in the past. And if for us to sit here today and not acknowledge that, then we're very ignorant of what possibly happened, because it's the same stuff. It's just a modern veneers being put on it today. But the advent of the crypto space allows us to move to a spot where actually more and more people will get more freedom. And that sort of thing. That's what the crypto space is really about. I mean, you take El Salvador again, if the president's right and why he wants to do it, and he's a good case study here, he said 70% of his people do not have a bank account, but 90% of them have a phone. But we can put an app on there and they can trade cryptos and do things. I mean, that's, there's going to be a lot of bumps along the way, don't get me wrong, and that sort of stuff. But that's the start. He's putting more power into people, and that's where it comes into, not have a central control. The whole game's given up when it's called the central bank. I mean, centralized.
Yeah.
That's it. It's control. I mean, if I really want to go, that's communism in that sense, because it's regimented at central control. It's central planning in that real sense. But no one thinks of that, of course. We have a better name, the Reserve Bank, but we're still a central bank. So anyway, so we got to keep that in the background.
I think that even as like globalization increases as well, like crypto, you can just transfer money from Australia over to, I don't know, India or the US within seconds, and you don't have to pay like the massive commission fees either. And even for people that are like, say, from like homeless or something like that, they usually don't have like the identification or the residential address sort of thing to create a bank account. Whereas, eventually if crypto does get to a certain level, they can probably just have cryptocurrency on an app and, go for it. Still be able to purchase and have value.
For sure. Absolutely. Just, I think you touched on the other chart and you went back. This one here, I think it's similar to the other theme. I'll just see it a bit better. Yeah, it's just a bigger one, just showing the red line is essentially the 10-year treasury. So that's, interest rates. And this is going back to like 1959. And then, the blue line's the S&P 500. And the thing to take out from here is basically after 1983 when interest rates really peaked, as in really peaked. And if anyone was around, I was only a young boy back then, but I remember high interest rates were in Australia. I think my dad said, geez, 18% mortgages and all this sort of stuff. It was nuts. Again, we were all affected around that time. But you can see as interest rates have fallen, therefore the cost of money has fallen. Therefore, what's happened? Financial assets basically have just moved higher and higher and higher. Sure, there's been corrections along the way, and you can see on the chart, there's the dot-com crash for 2000, there's the financial crisis, the GFC and things along the way. And then, of course, as the chart says, there's the everything else crisis, and there will be another one down the track at some point. It'll just happen. We can talk about that probably on another presentation. But again, it's just for people who are on this webinar with us, they get to understand what the flow is. This chart's just another interesting one that came into just to really put into perspective the coronavirus pandemic as a crash has so far been about 30%. The GFC is about 57. That was a big one, and it was a real long burn too. Not only was it severe, it really, really, burned in terms of the recovery back. And then the dot-com, bubble as well was, 49%. So these things happen. And if you just look at what we've got here, 2000 and 2008, that's 8 years. That's like a cycle. And then we sort of went pretty well for a while until we got up to the pandemic. We sort of had something in 2018 that was a bit of a tapering issue there. That was sort of leftover of the Fed. They were printing money, and then they said, we'll taper back, we'll slow down on what we're doing. And the markets had a little bit of a tantrum back in 2018. So you can't say it 100%, but it tends to be 8 to 10 year cycles. Generally, there's something that goes wrong. And this is in financial markets in a general sense. But at the moment, we're very much in a bullish phase of equity markets. But I'd say that's purely on the basis of the free money. You pull that out, it'll be a very bad day. And the crypto, of course, I think is generally in a very good longer-term bull market, but it's subject to a lot of FUD and all those sort of things that are happening every day. There's some, I mean, you go to bed at night and you wake up and you find out Bitcoin's either up or down by $1,000. It just happens. It's just the nature of that particular
That's
beast.
Unheard of in like the AS.
Oh, it is.
Yeah.
That's why I said earlier, you've got to be prepared for those volatility spikes. And the best bit of advice, I shouldn't use that term because we're general advice, I could say to anybody who wants to get into cryptos, buy it with the cash you've got, don't leverage it, because that's what you'll get annihilated if there's a big spike movement against you, having a leveraged position. And we did see a lot of people globally get wiped out, around May. That happened. We had these big, falls. It started with Elon's comments and then other comments here, and then the energy stuff here, and then all this nonsense. I loved it when they said, Bitcoin's mining costs more than half the energies of most countries. And, it's terrible and all this stuff. But did anyone bother to compare Bitcoin and the network to what the traditional banking network is around the world? Of course not. We don't want to compare that. So you can see where things come in and to knock things around. So be mindful of those sort of things. Now, this chart here, why would this be here? This is here because this is now the inflation part. You talked on this a little bit earlier, Kate, where inflation is. At the moment, we're not seeing it in the official data, but the official data is a joke because they measure the wrong things. You don't eat, plasma TVs or LCD TVs or iPhones or whatever else and other things that you're conducting. Your regular real food is going up. Animal protein, your fruit and vegetables, that sort of stuff, dairy, that's all going up. Now, this is just a chart on global food prices, and you can clearly see after a period there, it's really moved up. And that's what's starting to come through now into the data, and that's the problem. And the way I see it is the inflation goes up, people go, hang on a sec, why am I getting 1.5% on a 10-year US bond when inflation's now running at 2 to 3? I'll tell you what, you want me to buy these bloody bonds off you, Mr. Powell, federal chairman, you're going to have to start paying me a better yield. So then interest rates start to go up. And then when interest rates start to go up, that's going to change a lot within how they value, companies and all that sort of stuff as well. How that falls into the crypto space is, well, they could get caught up in a liquidity issue because people are trading. People might get a margin call because their stock portfolio, which is leverage, is in a margin call. The quickest way to get some money is maybe they're going to liquidate their crypto portfolio, because we are intertwined in markets just because it is a new asset class to trade against. But what I think is happening is a lot of leverage that was in the weekends is being taken out, and we're just seeing the foundations of it build back in. Believe it or not, if you looked at Ethereum, it's actually done all right for the year. Bitcoin's, been down so far for the year, but Ethereum, based on where it's rebounded to, I think it's up about 20%. But you don't get to see those sort of things unless you're following the lines on it. So inflation's there. So you were right to bring on that earlier, Kate. It is very, very much out there, and it's going to flow through into the economies. And no, I don't think anyone's really prepared for it, and that's the thing. And then that's going to shake up the regular markets a lot. And how that then falls, I have no idea. But if it falls and it means Bitcoin falls a lot, that's when you back the truck again and buy more of it. Remember, there'll only ever be 21 million coins, and at least 10% of that's probably lost forever anyway, because people have lost their wallets or they've died or something's happened. So it's actually going to get scarcer and scarcer in that respect there. So that was just to remind people, yes, inflation is very real. But the people who calculate it, they're just playing with their numbers because that's what they do. All right, there's your rise and fall of Bitcoin, and it goes back to that earlier bit where we had the mem there with Buzz Lightyear and Woody, and we've had these falls of Bitcoin, since now, or going backwards to 2016, about 11 times, where they've been 30% or more, and every time. It's had its peak. Look at that particular peak in 2017, nearly 20,000. It fell back well under 10 and then fell well all the way down to 3,200, and then it slowly made its way back up, and then, of course, it skyrocketed. And the reason the skyrocket was there was because we started then to get the bigger adoption stories. That's when someone like Tesla did come out and say, guess what, people? We're now putting this as part of our treasury. That's the real wake-up call. I think prior to that, it was a lot of people in the know and who were trading it, and it just didn't get the big breakouts. Yes, obviously, if you bought at a low base, you'd be happy as. But it's been this run-up now because it's now being noted. You just got to look today how many people talk about it inside even the big investment banks. There's always a story like JP Morgan's getting a crypto desk here, or Goldman Sachs there's doing something, and all the talk about who's going to be the first in the United States to come out with a Bitcoin ETF fund and all these sort of things. I mean, these were things 2 years ago you never would have even heard of. And then, of course, MicroStrategy, again, Michael Saylor, him saying how much of their company they own in Bitcoin. And I think he just took a raise about a week or 2 weeks ago, 400 million, massively oversubscribed. So go buy more Bitcoin. And the market said, take my money, take it, because they like what it does. If you look at that chart, that's pretty severe. It's a big knock. It's 50%. But it just means you got to just keep the faith with some of these things. And I can remember in equities seeing similar things. I remember when the GFC hit and Commonwealth Bank went down to $25, and people might go, "Oh my God, it's going to keep falling." But anyone who was smart enough to buy it then and look at it today, it's now north of about 100, and it pays, prior to COVID, it was paying around $5 a year in dividends. So if you bought it at 25 when the GFC was there, and you held it, you've now got a massive capital gain. That's awesome. Plus, it's paying you $5 every year. Then $5 on a $25 investment is 20% annualized in terms of just an interest return. So, this is the same thing that's going to happen here as well. And again, as more and more usage happens, it'll feed it. It'll just feed it. I can't remember what the next slide is. You might want to jump there. I'm trying to remember what it was. There we go. Oh,
just the
this is just again, getting the public data. Yeah, sorry, Kate, you go.
No, that's okay. I'll just read it out.
Yeah. Oh, well, you read it out because it's pretty self-explanatory. You want to read it, or you want me to read it?
So EFTs clearly just have. EFTs clearly have the highest percentage of Bitcoin ownership, I'm assuming.
Yeah.
And so countries, what is the countries holding? Do you mean in the actual
countries that have got
GDP
a proportion of it? Yeah.
Or like El Salvador?
Yeah, they're actually not on the list. You just keep talking. I'll just get this particular one back up on my list here because I have it on my model here. There it is, treasuries, and I'll tell you the countries. This is again just what they report. It's Bulgaria and Ukraine. Apparently, the countries that own a bit of Bitcoin. There you go. Apparently, Bulgaria owns 213,000 Bitcoin, and Ukraine owns 46,000 Bitcoin. There you go. So El Salvador's not on this list yet.
There you go.
I think the El Salvador part is to facilitate it as legal tender in their country, not so much the government buying a bunch of it.
Yeah. Okay.
That part there. But the point behind that is to illustrate that nearly 7% of it is already tied up in various entities. And over time, this will grow.
Almost as many as have been lost.
Well, that's the thing. That is. More of it has been lost. Yeah.
Yeah. It's shocking when you actually see the numbers, just how much 10% is to be just missing on cold storage or inaccessible. Such a shame. Such a shame.
Well, that's why. Well, let's give ePocket a plug. This is why your app's so good, because you guys spend a lot of time encrypting it and making it super, safe. And users like myself can, have our crypto on there, our Bitcoin, and we don't need to go to those troubles of getting a cold storage and all that sort of stuff, because the ability to get into the app has got a lot of protection, very good 2-tier and all that sort of stuff. You guys behind the scenes have put all the hard work in. So, dummies like me can just, type in a few things and open up our apps and that sort of stuff.
We've definitely built a very multi-tiered security system. So you've got your 2FA on, and if somehow something did happen, we're still going to cover your funds. It's only that's why we encourage that you do enable your 2FA, because
Oh,
if that's
yeah.
switched off, then we can't
Well, you'd be silly
cover
not to
any
have it.
assets that are lost to any, if
Oh,
there was
sure,
some kind of
absolutely.
hack or something like that.
And
But
it's so simple to have the
mm,
second factor on there. It's not like it's
absolutely.
difficult to do,
Yeah, yeah,
and it
absolutely. And
works a treat.
even the banks back in the day, well, not back that far back in the day, but they had like the little USB random number generator. It's exactly the same thing, but just through a software on your mobile device. So, it's not
Absolutely.
like it's a new technology. It's just a bit of a easier way to do the old technology rather
Yeah.
than having to carry a little tag around.
No, absolutely. No, it's great, and that's why I like the app, because it's very, very simple to use, both either on your phone
Mm,
or via Windows, like I tend to do every now and then, just because I like having the big screen so I can see the
yeah,
numbers a bit bigger
the
and that
chart.
sort of stuff there.
Yeah,
But that's the thing. That's what's good about you guys. You're reinvesting into your own app. So
yeah,
every new upgrade, it's better and better and better, and then that's great, because then the end user knows that. So
yeah,
that's a good thing. So
absolutely.
we're happy that's all happening in that respect there. But
Yeah,
again,
and
sorry.
sorry, I was just going to say, and with the sort of the security, because we've built our own ecosystem, you don't have to rely on, or you don't have to rely on the blockchain congestion. You don't have to wait that 10 minutes to place a trade. You don't have to wait upwards of an hour to transfer funds to one of your family members or friends. If they have ePocket, then it's instantaneous, because it's all just within the ePocket ecosystem. It doesn't matter if they're on the other side of the world, or if they're right next to you. It happens straight away, and it doesn't have to go via the traditional sort of blockchain protocol. Yeah.
No, it's no wonder it took everyone there a while to get it together. That's for sure. It's not like
Yeah.
that's for sure. But anyway, so these treasuries are coming into place, and that's expected to grow over time. And I think the next chart you got there is the stock to flow model.
Mm,
Now, for those that don't know, this is a model that's been pushed out a long, long time, particularly obviously with Bitcoin, and it's basically to factor in that when the halvings happen. And for those who don't know, people that go mine Bitcoin, get a reward. They get a Bitcoin for their efforts, and then basically every 4 years, whatever the amount of that's being released in the mining space then halves, and then it'll halve again and halve again and halve again. Believe it or not, the final Bitcoin will happen in 2140 or something. That's what I read in terms of how it will happen. So we've got literally another 120 years to go until the mining aspects of it all slow down.
yeah.
And the model is to represent that. And the thing at the moment is, and if you go to the next slide, because it's a zoom in of where we currently are, it's been pretty accurate of following it. And it's just at the moment it's deviated away from it. But if you were to follow the model, it's been pretty accurate on where they want to go with it. And the next level they're talking, of course, is where the 100,000 sort of comes in. And anyone who keeps following just the general news flow would see various talking heads out there saying, well, we're sort of predicting that's the next sort of level. I'm not going to be that bold and sort of say that, because it makes you look like a fool, because if you can't get it, you can't get it right. But I just think generally, though, looking at the trends of what we've seen, I think over time it will be worth more because of the
Yeah.
scarcity, and then a variety of other factors because of the network use and all that sort of stuff. I mean, you just got to look now with all the enthusiasm that's hitting into Ethereum again. I mean, that's basically the backbone for the NFTs that are out there. The DeFi side of things, again, people don't know what that is. It's decentralized finance. That means if you want to borrow money, you can go via these providers and literally cut out a bank and
Mm,
get your settlements done literally like that. And the other thing people forget, I think it's worth talking about, Kate, was when we had the meltdown, the crypto meltdown, and everyone's going, oh, gee, look how bad this is. And Coinbase, for example, they went offline a bit, and I'm not sure if it was Kraken, but some of the big ones, these are the really big
mm,
guys. But you know what? All the players that were in the DeFi space who were just settling contracts, they continued to go without a hitch. Nothing happened
yeah.
because their networks worked. They spent all this time proofing it and testing it, and they had the biggest storm hit at them, and they got through it no problem. Now, sure, some end providers, like, and that happens even in the stock market. There's, those app guys like eToro and all that for trading stocks and all that sort of stuff. They just fell apart. But that's a problem on how they've developed their own, their app and their network. But where it really mattered in the real applications, it was like, no problem. We worked. We had no fails. Because that's the thing. When it's on the blockchain, it's there. Its integrity is 100%. And therefore it won't fail. So if it's then transporting people's medical records or their title deeds or anything else, not just financials, the integrity's there. And, more and more people will be using it. Again, anyone who's trading stocks right now, you settle on the ASX. They are going to move from what they call the chess system now, where all your holdings are. You have a unique number and they hold it on a computer. It's on a database, basically. They're going to be moving over to the blockchain. I don't know which one, but they're going over to the blockchain setup because they know that has the integrity.
Imagine being able to trade on the weekends in the stocks.
And that won't happen. They're still going to stop. Yeah, that won't happen. We don't want to go there. No. One thing. Go there. Yeah,
one thing at a time.
I'm enjoying Monday to Friday just trading stocks, only working 6 hours a day. That's all we want. This nonsense now with Bitcoin, I'm going to have to talk to Toshi about that and say, mate, that should never have happened.
I think there was just this slide back here. There we go. I was going to say, so what would you say would generally constitute a bear market or going into a bull market? Or you mentioned about, we're in a bull market, but there's subsidiary kind of bear markets in that.
Yeah, the first thing to do, we haven't got a chart on this, but you've basically just got to get a chart of, say, Bitcoin and then put some moving averages on it, because that's the quickest way to sort of work out, are we still trending lower or are we starting to flatten out and maybe looking that we could maybe trend up a little bit. So I'm going to just keep talking a bit here because I'm loading up a page to give me such a chart. But that's the most effective way. Now, if people aren't familiar, take any asset, doesn't matter what it is. A BHP, it could be gold, it could be oil. You have a price. You can then use a charting program to get a moving average. And if the price of said asset is above its average, so that means it's above, that's generally a good thing. It's above average.
Yeah.
That's, as the saying goes, hey, you're above average, you're good. But if the asset is below average, therefore it is bad. So the quickest way to look at things would be to just underlie the asset and throw some simple moving averages over them. The common ones are like a 20-day, 50-day, and then go all the way out to 200, because that then irons out the volatility, and then you can sort of see a bit of a pattern there. I'm still loading up the Bitcoin one right now because it's just a bit slow. Everyone's obviously downloading their Netflix now because they're all at home. So I'll just quickly go to here because I just want to be accurate with what the data says, that's all. So let me go on that if it's going to do it. Yep, here comes the advanced chart, year to date. Yep. Well, I don't want that one there. And just right now, okay, so the 50-day moving average on Bitcoin right now is 37,300, but the spot price of Bitcoin is 33,200. So the asset of Bitcoin right now is 33. That is below its 50-day average. So that is still negative. That's still bearish. Now, if I change that to a different number or add a different period in there, like if I put the 200-day average in, we'll get a totally different figure. And the 200-day average right now, I'm just going to get this right on this chart, it's right on the end, because that's slower, because there's more time, well, that's even higher as a figure. That figure's around 43,000. Yeah. So what we then want to see is these averages themselves cross before it meets price. What we should probably do, we can do another one of these particular webinars where we can actually talk about technicals. This is really a period of technical analysis or trend following where you can apply this to Bitcoin, Ethereum, gold, BHP, whatever else. It's just technicals over an asset. But the quickest way to look at something to really decide quickly is use your eyes and say, is the said asset in downtrend or is it in an uptrend? Yeah. At the moment, with where Bitcoin is, if you just take all the averages off, you can see it's in a downtrend. So that tells you it's still in a bit of a bear market. The thing is it bottoming out, and therefore on the possibility of the rise up. You'll never pick the bottom. No one ever does. Anyone says they do is telling you a fib. But it's where you can accumulate and then hopefully ride it up next. I'm just going to go back to this, put a 20-day. This is just interesting because the 20-day average for Bitcoin was 35,300. Now, if we were having this show yesterday, that's where Bitcoin was.
Yeah.
On its 20-day average.
It just shows the volatility.
So you can see what I'm getting at. It moves around. Look, it's moved $1,300 today. So that's just how it is. That's nearly 4%. But if we were looking at the price yesterday, its price was pretty much on its 20-day average. So it's starting to come into that point. Now, it's still going to have a bit of volatility there. The longer dated averages, it's still going to be below. But as time goes by, they will catch up. Either the price stays the same flat and the averages meet it, or there's a movement up and then it crosses it. So the best thing to do is just use some simple technicals like that. Don't worry about with some of the more advanced ones. There's plenty out there, and there's a lot of free charts you can look at to just look up, Bitcoin, or for that matter, Ethereum or anything else. And I believe the one on the Pocket app, you can time it and it's candlesticks, and you can just then see the pictures there. And the idea of the candlesticks just tells you in a given period, was the first price also happened to be the high price, or was the first price the low price, and then where it's moved to the next one. And if they're all red, that means they're trending low. If they're going green, it means the price, and then the next one's moving higher. I know it sounds a bit gobbledygooky, but it's the quickest way to do it. Maybe next time we'll just do a little technical one for people, and we can just do it for the overlays. But that chart there was really just to illustrate that Bitcoin's had corrections before and it's recovered. But the point was, it's been put on the map very early this year when Tesla came out, or Elon came out and said, hey, we're putting it on the treasury. And then that elevated it. And then other people said, well, who else is going to do it? I mean, can you imagine if Apple came out and said, oh, we're going to put 5% of our cash into Bitcoin? What that would do to Bitcoin? It would just go nuts.
Blow up. Yeah.
It would just go boom. If you weren't already in it, you wouldn't have had a chance to get in it. You'll be chasing yourself. That's the thing, because it's when these events then happen, unless you've got a position, you're going to be playing catch-up footy all the way.
Yeah. And then that's usually when I was going to say, that's usually when most people get FOMO, where all the new traders or the new people into Bitcoin jump in, and then they get cold feet real fast.
Oh, sure. Look, but that would be a seismic event if something like an Apple, Amazon, someone really, really big came out and said, we're doing this. I still think, though, if we happen to see an ETF be approved by the SEC for the US market, and it's a Bitcoin one, that could be a nice little welcome kick along, because they haven't approved one yet. They've got them in Canada, but Canada's not the US. But if they do that, that could be the sort of thing. And if that happens, and that's another thing to build upon. And then part of that FUD that we've been seeing just seems to fall away and all that sort of stuff. Like at the end of the day, these miners leaving China, they're going to relocate around the world. That's actually going to even be better for Bitcoin, because it's going to be even more decentralized. It means the hash rates will be fine and spread across the globe. And all these worry warts about, the green nonsense stuff, we go, mate, they're getting their power from hydro, or it's from geothermal, or they're getting it from solar. They're not getting it from evil coal, so don't worry about it. And life goes on. And then if you stop and think about it, the clean energy guys will want to chase these people, the miners, because it then helps their argument to get more of their so-called green energy used, because they've got a guaranteed buyer of it and that sort of thing. It actually would be better for the environment from that angle perspective if more and more of them are doing that. But no, they had to say, it was using evil coal and therefore it's not so green. I mean, so you see what I mean? It's just that real nonsense stuff out there. But that's the world we live in.
Awesome.
And
now,
that's the end of what's going to happen when the Reserve Bank not printing money, inflation bites. It is going to be a train wreck. I just want people also to realise, I don't know when it's going to happen, but just be prepared. It will happen. History has told us that. We had the .com boom and busts. We've had the GFC. These are all very real events. Prior to that, we had the Asian crisis, 1997, and when I was in year 10, that was 1987. So, these things happen, folks, and markets are at record highs now. I suspect the carnage in the stock markets will be really bad. It'll hit the crypto markets, but I'll tell you what, if you've got the money, that's the places you really want to back the truck up and get a lot of. We won't worry about what pricing could be because we're talking about an event that hasn't happened yet. But the ingredients are certainly there because the Fed's out of control. They're printing money, and at some point they're going to stop because they're going to go, oh my God, the inflation's really starting to be a problem here. Or interest, and they're going to lose control. They will lose control. That's what's going to happen. They've created this genie. We've got it. It's going to go. But everything's happening now in the crypto space is going at such a fast rate, they'll be able to push through it because, if anything, that last correction showed their networks can hold up to the toughest of scrutiny and still settle no problems because they don't have the fragility of the central banks and all these other commercial banks that are over-leveraged and all that sort of stuff.
The beauty of decentralization.
Absolutely.
Awesome. Well, thank you for joining tonight,
No worries.
Andy. We've just got some contact details there for if anyone has any questions. We are also offering, we're introducing at the moment, we're going to introduce some commission-free trading. So this is actually valid for 1 anniversary month. It's available to existing customers as well as new customers. And so, it's just that 1 anniversary month. Commissions will still come out, but we will reimburse them at the end of each week, just in US dollar. So, there's
Lovely.
just a button there if anyone's interested in that one. Just to let people have a bit of a play around the platform and get to know it a little bit without having to pay any additional fees out of pocket as well. We do also have obviously a few links here to share, just a little bit of promo stuff. We've got Andy's company here. Oh, sorry, I don't have a heading on it. So this is a link to Andy's website as well if anyone wants some additional information on anything that we spoke about tonight as well. And unfortunately I can't put more than one tab up, which is really annoying. And
I'll just put it in the description when you pop it onto YouTube.
Might as well do some pop-ups, but and then just the ePocket sign up as well if anyone isn't a part of the ePocket community yet. But thank you so much. And it would definitely be a good idea to do like a technicals one on the actual trend analysis and the market analysis sort of side of things.
No problem. Well, you just let us know. We can easily do that. We'll just focus on technicals.
Yeah, perfect. Awesome. All right. Well, thank you everyone for joining tonight.
Thank you, everybody.
Thank you, Andy.
Be safe.
Thank you, Andy, for all of your knowledge. Don't get COVID over the next couple of days.
No. Stay home.
Yeah. All right.